What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Go click on that Webull link. Open up your new Webull account today. Go get that free stock. Go get that free money. The Federal Reserve's #1 job is to create price stability in our economy. And they have to really balance risk. Do they increase short-term interest rates? Do they decrease short-term interest rates? Will all determine what happens with that price stability. Right now, we don't have price stability because inflation is 6.5%. And most Americans are getting hurt by that. Why? Because prices continue to increase on basic necessities. Did you know 55% of Americans are making less than $50,000 a year? Only 18% of Americans make over $100,000 per year. So when inflation is high and there's no price stability in our economy, really, Americans, lower income, middle income Americans really are the ones that feel that impact in their pocketbook. We got the January CPI report on February 14th. And unfortunately, we missed some expectations. We missed our month over month inflation expectation, which was 0.04%. Inflation actually came in month over month at 0.5%. We also missed our year over year inflation number, which was 6.2%. Inflation year over year increased by 6.4%. If you look back 3 months from October, November, December, inflation actually came down pretty good and we hit expectations. But for some reason, it U-turned slightly in January. And I don't know if that's an anomaly or if that's a pattern. Will it continue to increase? We'll have to see once we get the February CPI numbers. We also got the retail sales numbers this week. They were not very good as well. They missed some expectations as well. So going into the Fed's March meeting, they got a decision to make. Do they stick to increasing short-term interest rates by 25 basis points like the market believes they're going to do? Or do they become extremely hawkish and bump short-term interest rates by 50 basis points? We'll have to wait and see, man. But I do know price stability is their #1 goal here so that most Americans can afford the basic things they need in order to live. Anytime we have turmoil in our economy, interest rates are up, stock market is going to be down, right? Companies are going to feel the pain because as interest rates keep rising, guys, people are going to stop spending money. And when people stop spending money, it really hurts companies because companies depend on Americans to buy their products and services, no matter what the cost is. That's how our economy works, right? Our economy works on consumer spending, but consumer spending at the right level. When our economy cannot make enough products and services to meet demand, then that's a problem because that increases prices. As investors, we want to definitely monitor this situation. We want to definitely take advantage of buying assets while they're on sale, but we also want to make sure we do a financial checkup in our own life. We can't just be taking all of our money and buying assets and not be in a position where we have a emergency fund, not being in a position where we have not paid off any high interest rate credit card debt. So those two things, right, we got to do first before we buy assets. Because remember, the assets that we're buying right now, they're not going to be profitable. They're not going to turn a profit for us for at least 3 years. So I definitely want to buy assets, but I need to understand I'm not going to get a return on those assets for at least 3 years. So I want to make sure before I just go all in on buying assets, I just need to make sure my short-term stuff, like high interest rate credit card debt or my emergency fund, I got all of that buttoned up first. And then I can go all in on buying assets to build wealth long-term. Once we're ready to start buying paper assets in the stock market, we don't want to be the expert. We want to buy proven investments that have a historical track record of multiplying money and building wealth for folks. And in my opinion, I don't think you can go wrong with ETFs and index funds that track the S&P and track the total stock market. I don't think you can go wrong with that. But you do your own research. You do what you believe is best for you when it comes to investing your money to multiply it. I have chosen what I'm going to do. And I've told you guys what I'm going to do. And I'm going to continue doing it because I know history tells me that if I do it and I do it consistently and I buy the right blue chip assets, and they will multiply my money and build my wealth for me. And I believe the same for you guys. But let's make sure we understand why the Fed is doing what the Fed is doing, because it's going to help us as investors. The Fed is doing what they're doing with interest rates. They're raising interest rates in order to bring inflation down, because the most vulnerable people in our country, our lower income and our middle class income earners, are the ones that are being devastated by inflation. Like I said, only 18% of Americans at work that earn make over $100,000 a year, guys. 18%. So that tells me 82% of Americans could be impacted by high inflation, right? They could be impacted by the increase in prices of our goods and services, to the point where they have to go depend on credit cards in order just to make ends meet. And that's just not the way it should be. So the Fed knows that, and they know the only way we have a healthy economy is when we get inflation down to 2% and we have just enough demand, just enough supply, and we have an equilibrium, right? We have price stability back in our economy. But until that happens, they're going to keep jacking them interest rates, guys. So please understand that. Please understand when you hear the Fed Chair Jerome Powell on TV talking about interest rates and inflation and recession and all of those things, really the main thing they're trying to get accomplished is to make, goods and services affordable for all Americans. That's really what they're trying to do. And without that, our country's broke. Our economy is broke. So please understand that. But don't you miss the opportunity to buy paper assets, because remember, as long as our economy is in turmoil, interest rates are high, inflation is high, stock market's going to be low. So that means there are assets, paper assets in the stock market, our favorite companies, our favorite ETFs, our favorite index funds that are trading below what they normally would trade for. So that's when we want to buy low and we want to hold those investments. And at some point in the future, we have the option to sell high and make profit, or we have an option then to turn on the income stream through dividends on our investments that we've made over these last year and these next 2 years. Because again, we should be looking long term. This is not a short-term game plan that I'm doing, guys. It's a long-term game plan. But it starts with buying these assets consistently and holding them long term. Drop me some comments and let me know what you guys think the Fed is going to do in their March meeting. Now, I know there's more data that'll be coming in that they'll be looking at before they make a decision on how high they will increase short-term interest rates. We already know they're going to increase it. What we don't know is, will it be 25 basis points or 50 basis points? We'll know that in the coming weeks as more data comes in. But I want your opinion on what you think they're going to do. So drop them down in the comment section. If you want those 12 free stocks from Webull, click on that link down below. Click on that link. Open up your new Webull brokerage account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you in the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.